Assalamu alaikum, and welcome to this webinar on calculating Zakah on modern financial assets. There's a lot to learn about Zakah, the obligatory charity owed by Muslims. And this presentation will provide a brief overview of who should pay Zakah, what types of property it is owed on, and how to calculate it on certain assets. I'll take a moment to introduce your presenters for today. We're joined today by Azzad's President and CEO, Bashar Qasem, who is a certified Shariah auditor and advisor, one of the few in the U.S. who hold that distinction. And my name is Fatima Iqbal. I'm a certified financial planner at Azzad. I'll be giving the main presentation today, and Bashar will answer questions from the audience. Before we begin, we want to let you know a little bit about Azzad Asset Management so that you'll know where we're coming from when we talk about Zakah. On your screen, you'll see 7 of the services Azzad provides for our clients. These include calculating purification and Zakah amounts, which is the topic of today's webinar. Azzad follows Halal investing guidelines from AOFI, the accounting and auditing organization for Islamic financial institutions. The Zakah calculation guidelines in this presentation follow AOFI rules. AOFI's comprehensive standards are based on a consensus by internationally renowned Islamic finance scholars from 8 schools of Islamic thought. But please note that this presentation is not intended to be comprehensive in all schools of thought. This webinar is intended to provide a brief overview explaining the general principles of Zakah calculation. Of course, you can always learn more by contacting us at 888-86-AZZAD. We take Sharia governance and compliance very seriously at Azzad, and we follow the guidelines from AOFI, which I mentioned in the previous slide. We also have an in-house Sharia auditor, who is our CEO, Bashar Qasem. We also have an active 3-member Sharia advisory board, which provides guidance to the company on matters of Sharia compliance, reviews the process for calculating Zakah and purification, and provides rulings on religious financial matters when there is no precedent from AOFI. Additionally, our Zakah and purification calculations are audited for accuracy by a third-party verification firm, IFAS, or the Islamic Finance Advisory and Assurance Services. So now let's turn to today's topic, which is Zakah. First, let's understand the basics of Zakah. Zakah is a financial obligation on every Muslim who owns certain kinds of assets worth more than a set amount, which is known as the nisab, and if they have owned those assets for at least 12 lunar months, called the Halal. Zakah is mentioned in the Quran 81 times and is often mentioned along with salah or prayer. While giving to charity is a financial transaction, it is an integral part of a Muslim's spiritual health, and specific care should be given in making sure it's handled correctly. Zakah is an opportunity to bless your wealth by giving it to those in need. Zakah is obligatory on every living Muslim regardless of gender, age, or mental status who own assets that meet the other conditions of Zakah. However, if certain conditions are not met, then it does not remain compulsory. Let's take a look at the conditions that must be met before Zakah becomes obligatory. I'll just list them now and then explain them in the next few slides. The conditions are owning at least the minimum amount of wealth for the nisab, the lapse of 1 lunar year, complete ownership of the assets by a particular person. There should be no other reason that an asset is not zakatable, such as insolvency, and the assets must have some real or assumed growth. So first, the total amount of wealth owned by an individual must meet a minimum threshold, which is called the nisab. And while prophetic hadith describe the threshold or nisab for different assets, such as gold, silver, and livestock, the question is what nisab is relevant on our modern financial assets. The nisab can be determined based on the nisab of silver or gold, and this is equal to the current market value of 85 grams of gold or 595 grams of silver. According to the Hanafi and Maliki juristic schools, the nisab is calculated at the beginning and end of the year, and changes in between are overlooked. So any increase of property after reaching the nisab during the year is to be included in the total sum counted for Zakah. This is considered the easiest and most applicable among other juristic views, which has made the majority of scholars adopt it. The value of 85 grams of gold earlier this year was around $3,900. So any Muslim who owns zakatable assets that are worth more than $3,900 or more, and who has held these assets for at least 12 lunar months, should pay zakah on those assets. We'll go over which assets are zakatable in a moment. So what happens when wealth reaches the minimum amount, or the nisab? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the nisab. The Arabic word hawl refers to this holding period of one lunar year after which zakah becomes due. Zakatul mal is not due on a particular day for everyone, but it should be paid once per lunar year. Now, many Muslims choose to pay their zakah during Ramadan, both for the additional blessings of giving during this month and because it's easy to remember from year to year. Each individual can set their own hawl date based on when they have held their zakatable assets for a minimum of one lunar year. For people who choose to set a hawl date based on the solar calendar, the percentage for zakah is raised up to 2.577% instead of 2.5%, because the solar calendar is a little bit longer than the lunar calendar. There are 5 areas that define complete ownership. The assets are settled and available. The owner is vested. The owner can access the assets. Of course, the owner can dispose of the assets. And there is no interference by others. Before we discuss how to calculate zakah on stocks, let's briefly recap the kinds of accounts that can hold zakah first. For these accounts, we should refer to the conditions of zakah to see whether the owner has complete ownership. Owners have full ownership in accounts like IRAs and education savings accounts, but may have to pay taxes or penalty when withdrawing. For accounts with full ownership, zakah is owed on the amount owned after taxes and penalties. However, for the accounts that do not have full ownership, like current 401k accounts, there is no zakah due since ownership is not complete. The third condition that must be met is that the assets must be completely owned by a particular person or family. Assets owned by an organization or government are not zakatable. Zakah is liable on the assets that are completely owned and vested for the owners. Complete ownership again requires that assets be accessible and disposable by the owners without the interference of others. If you completely own an asset but would have to pay taxes or penalties if you sold it, this does not nullify the fact that you own it. So, for example, an individual who has an IRA can access the money in the account even though they would have to pay a penalty and taxes if they sold it before reaching retirement age. This fact does not prevent the IRA from being zakatable, but zakah would only be calculated on the amount that would be left after the applicable taxes and penalties. On the other hand, an employee cannot withdraw from a 401k or 403b account at their current job if they're below the distribution age. This 401k or 403b is not zakatable until either the employee leaves that job or they reach the age or point when they are allowed to withdraw from the account. A person must also be solvent in order for zakat to be due from them. If a person has debt that is immediately due, and that amount due is greater than what they own, then they are not liable for zakah. Assets that are zakatable include gold and silver, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. All cash, gold, and silver are liable for zakah at 2.5% based on their values on the day of the hawl. If the hawl is linked to the solar year, again, zakah is 2.577% instead of 2.5% to make up for the difference between the two calendars. There are certain assets on which zakah is not owed. Assets that are considered to be capital goods, such as tools or factories that are not zakatable themselves. However, the income that is derived from them is zakatable upon meeting the conditions discussed earlier. Furthermore, personal use property is not zakatable. This includes one person's residence, their vehicles, clothes, and other personal belongings. Only halal and lawful assets are liable for zakah. So no zakah is required on haram or unlawful assets, such as money derived from interest, gambling, alcohol, pork, or stolen money, bribe money, or any other impure money. And such assets or money must be returned to their lawful owners or donated to charity as purification. Now, purification is not a form of zakah or sadaqah, and it's only intended to rid oneself from impure money that one never intended to benefit from. In modern financial times, this includes securities or stocks that are deemed not to be halal according to Shariah investment guidelines, including financial options and derivatives. Azzad Asset Management uses halal investment guidelines established by AYOFI and adopted by the Azzad Shariah Advisory Board. Finally, assets intended for retained ownership and for the purpose of deriving income are not zakatable. This means that zakah is not owed on the current market value of investment property and income-oriented stocks. Instead, income derived from them is zakatable, as is the case with capital goods. So, for example, zakah is not paid on the market value of rental property. However, income that is derived as rent and is held for the Halal eventually becomes a zakatable asset. In calculating zakah, we start with the zakah base, which equals all zakatable assets minus the liabilities or debts that are payable by the Halal date. Zakah is not obligatory on wages, salaries, and income at the time of receiving such income. Zakah is assessed based on conditions we discussed earlier and must meet the ownership and Halal period requirements. Now let's take a look at how debt relates to zakah. If you make a loan, you owe zakah on any amount repaid as of the Halal date if it's in good standing. If the loan is past due and in bad standing, no zakah is owed until the owner recovers the debt, and the zakah is paid once for all past years it was in bad standing. If you have taken a loan and owe debt, the amount due before the Halal date is deductible from one zakah base. However, debt payments that are due after the Halal date are not deductible from the zakah base. So, for example, a person may deduct their current home mortgage payment from their zakah base, but not the entire loan amount. The interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets from one zakah base. This also relates to modern financial assets since bonds are also a form of debt. However, interest-based debt securities, including bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid are liable for zakah only on the principal amount, or market value, whichever is lower. Any gain due to interest accrued or market appreciation is not recognized as lawful, so there's no zakah paid on it. Such gains should be considered unlawful and purified by donating to charity. Now, if you make a loan, you owe zakah on any amount repaid as of the Halal date if it's in good standing. If the loan is past due and in bad standing, again, no zakah is owed until the owner recovers the debt, and the zakah is paid once for all past years it was in bad standing. If you've taken a loan and you owe debt, the amount due before the Halal date is deductible from one zakah base. However, debt payments that are due after the Halal date are not deductible from the zakah base. For example, a person may deduct their current home mortgage payment from their zakah base, but not the entire loan amount. The interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets. Zakah is obligatory on assets that have been held and saved for one full lunar year after reaching the nisab, the minimum amount of wealth after which zakah is due. This, of course, excludes any interest income that may have been unlawfully earned during that time. Most of us acquire money at different times throughout the year, such as from salary, inheritance, gifts, rental income, etc. If you choose to be very specific and only pay zakah at the time it becomes obligatory, then you can track the earnings and pay zakah for each amount separately when 1 year has passed from the date on which you took possession of it. But an easier method is to pay zakah on all the cash you've held for 1 year since reaching the nisab. This will bring a greater reward and raise you higher in status. It's easier and more generous towards the poor and needy and others who are entitled to zakah. For example, if 1 year ago you had $10,000 in your account, the value dipped mid-year to $5,000, and now you have $15,000 in your account. With this method, you would pay zakah on the $15,000. So we've gone through who is liable for zakah and what assets and account types are zakatable. Let's talk now about the calculation on zakah of stocks. We'll use common stocks as an example since we get a lot of questions about them. And of course, our clients at Azzad know that we calculate zakah for them on an annual basis and send a statement showing the total amount to be purified and paid from their portfolios. This calculation can be used for shares of publicly traded companies that you may acquire. For the purpose of this explanation, we will assume that the stocks held follow halal investment guidelines, since of course zakah is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing a stock, either for the growth and appreciation of the stock or for the income or dividends it can provide. With this distinction, let's take a look at how we can calculate zakah on a portfolio of stocks. While a shareholder may reap the benefit of both growth and appreciation and income from a particular holding, the original intention of why it was purchased is the key. Unlike taxes, we don't have the IRS looking over our shoulder. But since zakah is a matter between yourself and God, your intention regarding your investment determines what calculation to use. The zakah of a portfolio of stocks will be calculated by adding the zakah owed on income stocks and the zakah owed on stocks purchased for the purpose of trade or appreciation. You may be wondering why differentiate between stocks intended for appreciation and those intended for income. Stocks held for the purpose of appreciation are like assets that are held for the purpose of trading, and they're considered commercial goods, or in Arabic, arud tijara. For these shares, their zakah base will be based on the total closing market value of shares owned, or net asset value on the Halal date. That net asset value is then multiplied by 2.5%. To give you an idea of how a zakah calculation on stocks intended for appreciation and trade is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the Halal date. To calculate the zakah, we must account for a 10% penalties if the person is under age 59 and a half, and also the tax bracket. Assuming this person is under 59 and a half and in a 15% tax bracket, we calculate zakah by multiplying $50,000 times 1 minus the penalty rate times 1 minus the tax rate by 2.5%. This gives us the zakah due on the amount they would have had in hand if they were to withdraw from their IRA account. Stocks held for the purpose of deriving an income or for benefiting from dividends are considered to be capital goods, or arud mustaghallat. The zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. However, it's typically difficult to track this unless the data is available. That's one of the things that we take care of for our clients at Azzad. As a reminder for all of us, again, these are the categories of people or the causes that are eligible to receive zakah. These include the poor and needy, the collectors of zakah, those whose hearts are to be won, for freeing slaves, to the debtors, in the way of Allah, and for the wayfarer. Now let's briefly talk about purification, which is different from zakah when we're talking about investing. Part of the process of making stock investing halal is screening companies' lines of business, as well as their financial ratios. Now, these are some of the screens and ratios according to AYOFI. We avoid companies that profit from areas such as alcohol, gambling, insurance, interest, pork, pornography, weapons, and tobacco. And we also exclude companies that have financial ratios with interest income, excessive debt, excessive receivables, excessive cash, and cash equivalents. Sometimes it's not possible to know exactly where all of a company's revenue comes from, or the revenue is a trivial amount. While such revenue may be insignificant and unavoidable, of course it's never intended, and so it should be purified. Muslim investors can purify their investments by donating to charity the small amount that may have come from impermissible sources. This donation, again, should not be considered sadaqah or zakah. And of course, purification is a key criteria to maintaining a halal portfolio. Purification, again, is different from zakah and should be calculated and deducted before calculating zakah. Since we're talking about donating money, we also wanted to share with you a few tax-smart strategies for charitable giving. Today, we'll briefly describe 4 tax-advantaged charitable giving strategies. They are donating appreciated securities, establishing a donor-advised fund, establishing a charitable lead trust, or establishing a waqf or endowment fund known as waqf al-khairi. Now, if you own securities that have appreciated in value, donating them directly to charity can give you a big tax savings over selling the securities yourself and donating that money. So by donating appreciated securities, you're going to be avoiding the capital tax that you pay on them, which is going to allow you to donate more to the charity, which again means that you can take a bigger tax deduction. So we'll look at an example next to illustrate this. And in this example, we're assuming that you bought shares 10 years ago for $15,000 that have now appreciated to a value of $50,000. On a $50,000 donation of appreciated securities, you could save about $26,830 in capital gains and income taxes that you would have paid if you had sold the stocks yourself and donated the net proceeds. So in this example, you've made a $50,000 donation, you've saved $18,500 from taxes, and you've only used $15,000 of your own money. So this is an example of how charitable giving, and especially planned charitable giving, allows you to give more in smarter ways. The next idea is donor-advised funds. And instead of giving directly to charities, you can make irrevocable contributions to your donor-advised fund account. With this, you receive a tax deduction in the year you make the contribution to your donor-advised fund account. So even if you haven't decided yet on the charitable cause, you can still receive the tax benefits so long as you make that contribution before December 31st of that year. The money is then invested and it grows tax-free. So you may make the grant recommendations then by instructing the fund to donate to charities whenever you wish, again based on your account's assets. Again, this is a way for you to contribute funds, receive an upfront tax deduction perhaps in the year you need it, but have some flexibility in making those contributions later while still allowing those funds to grow tax-free. A CLT is another way that can help you give to charity while reducing your taxes. It can also be used as a tool to transfer assets in a tax-efficient way. And a CLT is a trust that donates a set percentage of its value each year to charity of your choice. And at the end of the term, the balance can return to you or to your family. So when you establish a CLT, you take an upfront tax deduction for the full amount of the trust. And if you choose for the balance to go to your family member, transfer taxes also may not apply. Now, when establishing a CLT, you will fund it with an irrevocable gift. That means it's a transfer to the trust that you can't take back, but you will get an upfront tax deduction. You can also choose how many years you want the trust to last. You will be able to designate a tax-exempt charitable beneficiary. You can choose a percentage the trust will give to charity each year. And you can designate a non-charitable beneficiary who is going to receive the balance of the trust when the term ends. And this can usually be yourself or a family member. Now here's a brief example of how a CLT works. If you were to set up a CLT with $100,000, a 10-year term, and a 10% charitable payout rate, the CLT would give $10,000 for 10 years to the charities of your choice. You're also going to receive an upfront tax deduction in the year you donate of approximately $87,000. And during that time, remember, the funds are also invested. So based on an average 6% rate of return, you could expect to receive almost half the amount back at the end of the 10 years. So with a CLT, you end up donating $100,000 over 10 years. You receive an upfront tax deduction of about $87,000, and you get almost half of it back at the end of the trust term. Again, all of this benefits you get with a $100,000 trust contribution that you initially make. The last plan giving tool we will discuss is a charitable waqf. A waqf is an endowment used creating Islamic guidelines. And today a waqf is a way to create an ongoing charity in our local communities. The waqf principle is preserved, while income generated from investments is used to benefit the charitable cause for many years. This means that your contribution will not be a one-time gift, but will continue to work for you well into the future. So how can we incorporate aspects of the waqf into modern America? By structuring the waqf within a U.S. registered organization, we have all the additional benefits of a legal entity with its own safeguards, as well as tax advantages. And we now also have a structure that functions Islamically as an act of worship, but is legally and structurally more sound to survive in our modern economy. To do this, a waqf needs to be established as a trust-based organization, and the trust itself is an agreement in which detailed provisions can be listed. So for example, the trust can restrict the charitable purpose to a specific cause and ensure the intent of the grantor is preserved. Also, it can stipulate that assets in the waqf must be halal, as well as specify contingencies for termination of waqf and subsequent distribution of assets. At Azzad, we've researched the particular provisions that are necessary from an Islamic perspective, as well as an American legal perspective, to ensure that the final trust is a genuine waqf. Now next, we're coming up on our pop quiz on the Zakah calculations. At this point in the presentation, you are welcome to enter the answers into the chat section. The first question: Abdullah is a 45-year-old engineer who has a 401k plan with his employer, Kenwood Corporation. The market value of the plan on his Zakah or Halal date is $100,000. His 401k contains stocks for capital appreciation only. Abdullah's tax rate is 30%. He's not in debt and is fully vested in the 401k plan. How much does Abdullah owe for Zakah on his 401k? So some of you may be taking out your calculators, but the answer in this example or in this question is actually D. The 401k is not zakatable because he can actually not withdraw the assets. Question number 2. Khadija is a real estate flipper who buys and sells houses. She bought a house in Miami for $450,000, and while she's seeking a good sale price for the house, she received a year's rent on the house totaling $30,000. The market price of the house is $500,000. Khadija is not in debt, and she kept all the rent money for a year. So how much zakah is she liable after 1 year? And in this, the answer is actually A, 2.5% of $530,000. Again, Khadija is looking to sell this house. She bought it for the appreciation, and that is a $500,000 value. However, she also received a year's rent, income of $30,000, which she held for a year, which created it to then become a zakatable asset. So again, we don't pay zakah on income, but we do pay zakah on assets which may have been income, but they become, again, part of the balance sheet because they've been held for 1 year. Question number 3. Ahmed was given a BMW as a bonus from his employer, Microsoft. Ahmed decided to sell the car when he received it. It took him 14 months to sell the car. How much zakah does Ahmed owe on the car? Does he owe 2.5% of the car's current market value? 2.5% of the car's original price at the date he received it? He does not owe zakah on the car? Or does he pay 2.5% of the manufacturer's suggested price? In this question, the answer is actually C. No zakah is owed because this is not a commercial asset and it was acquired without the intention to trade. Question number 4. Yusuf is a key employee at Cisco and was given options to buy 10,000 shares of Cisco at $10 a month. A month before the Halal, the price of Cisco reached $30. Yusuf then exercised his options and purchased 10,000 shares of Cisco. How much zakah does he owe on these shares? Does he owe $7,500, $5,000, $2,500, or $0? And again, before you take out your calculators, the answer is actually D, 0. And the reason for this is because he did not own the shares more than 1 year. Question number 5. Qasem just found out that his advisor at Morgan Stanley had invested his accounts in bonds, which earn money only from interest. He bought the bonds for $10,000, and they're now worth $11,000. The bonds have coupon payments for 5% per year and mature after 10 years. The total amount he has earned so far is $2,000. How much zakah does he owe on them? A, 2.5% of $10,000. B, 2.5% of $2,000. C, 2.5% of $12,000. D, 2.5% of $13,000. Or E, he owes $0 or no zakah. And again, keep in mind here that the principal amount that he invested was $10,000. So actually, the answer is A, 2.5% of $10,000, since zakah is only owed on the principal, since the interest gain, again, is not halal. So this brings us now to the Q&A portion of our presentation. If you do have any questions that you would like to ask to Bashar Qasem, please go ahead and type them in your chat box, and we'll try to get to as many questions as we can. All right, Bashar, we have our first question. I've heard recently that AOFI doesn't require zakah payments for a 401k plan participant, but that purification is still due. Is that correct? I think we're having some issue with the audio.
Yeah, the question. This question really depends on the status of the 401k, whether the participant can access these assets and withdraw it or not. If he cannot, then these are not zakatable. But if he can, like let's say he is, for example, above the age that they allow the participant to withdraw the assets or to roll them over, or the participant terminate his employment and the company enabled him to withdraw the assets, then these assets exactly treated like regular IRA, they will be zakatable, and the zakatable base will be the net after taxes or penalties, if there are any.
And Bashar, can you also clarify about the purification? Is purification due when the 401k is not accessible?
The purification, you calculate it regardless, this is you will be able to calculate the purification, and you need to do this process, at least once a year to cleanse your portfolio from any prohibited revenue that earned unintentionally. That's if your companies are invested in halal. So purification actually will be for the halal securities or the holdings. I'm not sure about the purification for non-halal holdings. I think you should really refrain from investing in these companies at all. Then once you deduct the purification, because the purification has to come from the zakah base, then you pay the zakah on the net after the purification.
Okay. So again, in 401k accounts, if the accounts are invested with a halal, according to halal investment guidelines, but there still may be some insignificant amount of revenue, it should still be purified every year, even if you cannot withdraw the funds.
Yeah, and you don't have to pay the purified money from the actual account. You can pay it in kind from any other assets that you have. And usually, if you are investing in a halal, should be in a very insignificant amount. Usually comes to be less than 0.5% or maybe even 0.3%, depends on what you are investing. And again, we need to look at the income statement of the companies that you hold, and then you do the calculations based on the income statement from the companies.
Okay. Next question. Are medical marijuana stocks halal to own?
I don't know. I mean, again, this is really would be for a scholar, like you need to ask, but I mean, this is really a medical. I'm not in the position to answer this question, unfortunately. Again, we are not a scholar. We can refer this to our Sharia advisory board to answer this question.
All right. Next question. I received a bunch of shares and 401k shares as an inheritance. I sold some of them and invested the money in something else, not stocks, but I left some of them the way I received them. They are probably not halal stocks. What do I pay zakah on? I think this question actually also is something that we get a lot from clients, again, who have 401k accounts where they may not have a lot of control over what stocks to buy. But what would you say to somebody who, again, may be holding some impermissible stocks in their 401k accounts or portfolios?
Yeah. Well, it is really problematic. I think the person should really sell these securities and buy or own halal securities. Companies that are not involved in alcohol, tobacco, gambling, banks should also pay attention to debt ratios. The criteria that is recognized by the industry and specifically IOFI guidelines, standard number 21, clearly specify these restrictions or guidelines. So the person should really get rid of these companies and revert not to use it or buy or purchase these securities at all. And also, once you own the halal ones, you need to be vigilant about calculating the purification, because the purified amount, this is the little haram revenue that earned unintended. You were not party to the agreement, and your intention is to benefit from the halal assets, and the haram amount is not intended, and you get rid of it.
Okay. So even with a screen portfolio, then you still have to do the purification in order to maintain a 100% halal portfolio.
Correct. Yeah, green portfolio, or what they call SRI, socially responsible investing, doesn't really meet the specifics of halal guidelines. So you have to be really careful. Again, I would advise the person to consult with IOFI Sharia standard number 21, or maybe the guidelines that we have at Azzad. You can look at these guidelines and restrictions, and you can follow them when you are investing in the capital market.
Okay. So I think the answer then again, if you're holding non-halal stocks, actually you do not pay zakah on them. You should try to purify. You should try to get rid of them, invest in halal, and of course do purification, even on those screen stocks, because they may also have an insignificant amount of revenue from something that's in store. All right. Next question: can I pay my zakah to relatives in need? My parents don't have enough income to meet their needs. Can I pay my zakah to them?
Yeah, the recipients of the zakah, they defined 8 recipients: family or relatives, parents and grandparents, or children and grandchildren are excluded, because these are your responsibility to pay, to really carry their expenses. Your children, if they are poor and you are well-to-do, then they are your responsibility to take care of them. So zakah should not be paid to parents or grandparents, children or grandchildren, brothers, sisters, cousins, in-laws, those are fine if they fall within the category of the 8 recipients, if they are poor, needy, etc.
Next question, how do I calculate zakah on a 5 to 9 plan for my young kids? And again, 5 to 9 plans are college education savings plans. In this case, the person asking is saying our 5 to 9 plan is 100% in stocks.
Yeah, unfortunately, 529s, these are educational saving plans. Usually, it's sponsored by states and a monopoly with a few financial companies. Every state has a financial company, and these are controlled. These plans controlled by the financial company, how they invest the assets. And unfortunately, they won't follow the Islamic guidelines when they invest these assets. So you will be don't be surprised to find a lot of non-halal holdings in those 529. Now, again, it's a daunting task to really go through these 529, especially when they have a mutual funds. And these funds have, some of them have maybe hundreds of companies. There are options. The prepaid 529, those like what you pay, that doesn't have the investment component, and it does no problem. But the 529 itself, unfortunately, there's a lot of non-halal holdings, and those you have really to sort them out, exclude those non-halal holdings, and then find the halal ones, and then you do the zakah on those. And again, depends on the investment objective of the fund, whether it is intended for to benefit from the capital appreciation, treated as urud tijara, or they are income oriented and so on. So it's a big task, and again, once you calculated this, also if you manage to find the zakatable base, you need to take into consideration any taxes or penalties due when you figure out the total zakah.
Okay. Next question is regarding.
Before we go, I would say there is another option where you can have a saving for educational purpose, maybe the cover bill or the education saving account. That would be permissible. At least they will allow you to invest in funds that you choose, so you can find to invest in a halal funds. Those are the alternatives for the 529.
And one thing I guess I'd add is, for 401k options, 529 options, if you don't have halal investment options in here, I think another thing is always to go to the providers and voice your concerns. Of course, the more demand there is for halal investment products, the more supply there will be, the more they will provide these alternatives that especially are very needed within the community. Next question is, can you explain paying zakah on gold when gold is not intended as an investment?
Gold as a jewelry, they're not zakatable according to the three fiqh schools, the Shafi'i, Hanbali, Maliki. Only the Hanafi, they would require the gold to be zakatable, regardless whether for jewelry or for saving or as a currency or as a monetary instrument. But the gold, if it's used as a jewelry, majority of the fiqh schools will not see that these are zakatable. Now, you got to be careful, because sometimes we buy jewelry or we buy gold beyond jewelry. It's used jewelry, but many people, they intend to buy it as a way of investment or saving, where they store it as a value. Got to be careful with this, because in this case, if it's not used for jewelry or intended specifically for to be used as a jewelry, then that becomes zakatable as a gold and silver. And again, the zakah will be 2.5% every year at the date of the haul, if it's above the nisab.
Okay. Next question is, zakah due on a rental deposit. If you renew your lease for subsequent years, do you pay zakah every year?
Rental deposit for the depositor?
It seems like it, yes.
Yeah, that's not zakatable. The rental deposit, you know, that money is, you're not accessing this money because it is, as long as the rental is continuing. They won't allow you, maybe after the uh, the end of the lease or the rental period, then you pay the zakah 1 year, regardless of how many years stayed in the hands of the rental company.
Okay. If you purchase a commercial property and have a loan against it, is zakah only paid on the income without regard to the property value?
If you purchase a commercial property and
A rental
and then
commercial
you receive rental, yeah. So again, the rental itself, if it lasted, whatever amount lasted after the passage of 1 lunar year, let's say you paid from that rental income expenses and like to maintain the building, whatever left from it, that considered to be an asset, and that is zakatable. But let's say you spend the whole rental income, there is no zakah on the income. Again, I would emphasize that zakah is a balance sheet item, not an income statement item. In other words, we look at the assets, we don't look at the income. Because eventually, if that income, you earned it and lasted the full lunar year, then that's really becoming part of your assets. But there is no per se zakah on income. Let's say somebody, or a salary, for example. You may earn a salary of maybe $100,000, but you spend all of it before the lunar year. There is no zakah on that money. Zakah is only on assets. The Prophet, peace be upon him, in the hadith said, لا صدقة إلا عن ظهر غنى. That there is no zakah except on the excess of beyond what we call the richness or the wealthiness.
Okay. And again, would you pay zakah on the commercial building itself, the property itself?
Exactly. So the property, if it's intended that you to benefit from the profit resulting from a higher price, from the movement of the price, then that fall within urud tijara. So that will be zakatable every year at the market value at the date of the hawl. And if you use any debt to finance these commercial property, that can be reduced contrary to the house that you live in. Why? Because these are urud tijara and you use debt to finance these assets. Let's say you have a property that is like $1 million and you use that about $500,000 to finance it. Then in this case, let's say the value of the property is 1.1 million, but you have that about $500,000, so you pay zakah on $600,000, and again 2.5% treated as urud tijara.
And what if this is like urud mustaghalat? You bought the property again for the intention of the rent that it will generate for you.
Correct. Yeah. Those what we call properties, income-oriented properties, or properties you purchased or you owned for the purpose of deriving an income. We call these urud mustaghalat. Urud is anything other than money, and mustaghalat means an income. So those they're not zakatable actually, unless there are assets, zakatable assets within these properties or these investment vehicles. Let's say you have a REIT, real estate investment trust is a good example, and those REITs they are securities and they represent companies. Majority of their assets are rental property, so they may have in hand some cash. And that cash, so you need to look at the balance sheet, the property itself or the value of property. There is no zakah on that one because it's intended for income. But if there is any cash there or equivalent to cash, then that's zakatable.
If I own common stock less than a year, is the hawl date value of that stock zakatable?
Again, what is the purpose for that? You owned it with the intention to trade it or the intention to to derive an income. Now, if this is part of your portfolio that you buy and sell, we we don't look at the howl for this particular stock. It follows the howl of the total portfolio as urud tijara. In other words, you buy it, you have now a security, then you sell it, it goes to cash. So then you turn over the money between securities and cash. We disregard the howl in this case. So the howl will follow the principle. But if you purchased a security for the first time, and this is your first purchase, and you intend to sell it again, we need to look at the howl for this particular one. So that becomes zakatable after the howl, 1 lunar year.
Okay. And this is a similar question. How do I calculate zakat on stocks that were held long term when they're sold?
They're held long term when they're sold. Yeah, I mean, again, the zakah on those stocks that you intend for benefiting from the profit from selling them at higher price, those are zakatable at the market value at the date of the howl. And again, when I say the market value, it doesn't mean that regardless if the price went up or down, you could really you may end up like the value be less, maybe 10 or 15%. So still that's zakatable. Again, we look at the market value. And if the price is higher than what you purchased, again, that's zakatable at the market value. We disregard any profit or losses in the value of these securities.
Okay. How is purification calculated on halal stocks?
Purification, we need to look at the income and on these securities. You want to look to see if there are any interest income that earned, for example, or if there is any revenue from prohibited activities. You need to look at those and then accrue it. So when let's say you have a company that earned like $1 million in interest, and you have like a million share. The company has 1 million share outstanding. So that equal to about $1 per share in interest income. So that has to be accrued. So if you own the share for 1 year, so that will be about $1. So you reduce this from your, you write the check, you deduct it from your portfolio. You're responsible, has nothing to do with the profit or losses the company make. And you donate that amount to charity. Now, if you hold the share less than 1 year, like, you can prorate it. Let's say you hold it for 6 months, half year, then that would be about half a dollar on the share and so on.
All right. Now, this is a question saying, thinking about the hadith you just quoted about zakah being on excess, this is a question about two lifestyles. Let's say person one has a high salary but also lives an extravagant lifestyle. They spend a lot, don't have a lot of savings, and maybe they have like $1 million house. Do they owe zakah? Versus a person who has a moderate salary but lives simply and is saving money to buy a simple house. Do they owe zakah on the money they're saving for a down payment, even if they don't own a home?
Yes, if that money in their hand and that money is above the nisab and they had it for 1 lunar year, yes, they will be liable for the zakah on that money. And again, we don't want to look at the zakah as as a misfortune. It's actually as a blessing. People who pay zakah, it's a form of ibadah. There is the people who pay the zakah, they will get the reward for it. So yeah, if that money in hand while you are saving, that money is liable for zakah. Now, if somebody is being wasteful or they spend a lot of money, etc., and they don't save money, again, there is no zakah if they don't have any money that is, that meets the nisab and lasted for one lunar year.
Okay. A question, I am under 59 and a half, and I have a 401k, traditional IRA, and Roth IRAs. Do I pay zakah on all of these or just certain accounts?
Roth IRA is zakatable. Again, you reduce any taxes or penalties from the account. For the IRA, the same thing. Now, 401k depends if you are enabled to withdraw that money. If you are enabled to withdraw that money, then that money becomes accountable. So you need to check with the TBA or with the 401k administrator to see what are the rules of the 401k.
Right. Yeah, I think that's also often a misconception. Not all 401k plans are the same. So
exactly.
You should really look at your summary plan document. You can request that from your employer, and that will list whether you actually can take any withdrawal at any time. If you can't, if you're restricted from taking that withdrawal, again, you don't meet the ownership criteria. Thus, it doesn't become zakatable. But for all IRAs, although you may have to pay penalty and taxes, you can still withdraw the funds, and that's why they would be zakatable. So next question is actually about cash. Can you explain how to calculate zakah on cash when, for example, I had $50,000 in cash last year? This year I sold some property and got an additional $40,000. So now I have around $90,000 this year in the account. How much zakah is owed?
Yeah, for the cash, any cash you earn, every cash amount that you earned, it started its own hawl and nisab. Its own hawl, of course, if the nisab is above, then that becomes zakatable. Now, if you are earning that money through different period of times, you have the option to track each amount through what we call zakah lot. It's exactly similar to tax lot. In other words, when you earn that money, how much of it lasted the full hawl, and then you assess the zakah after one lunar year. The same thing, you can do this. That sometimes for small amount of money, that becomes like really daunting job. So you could just look at the amount of cash that you have at the end of the year, just make it simple for you, and you just assess 2.5%. But if there is a significant amount of money, like you're earning like maybe 100,000 every month or millions, you're right, you may want to use a spreadsheet to track the hawl for each amount of money that you own. But most of the people, I believe, they don't fall within that category. So just looking at the amount of cash that you have at the end of the year, and you pay the zakah, make it like much easier for you.
By end of the year, you mean you're on your hawl date?
Hawl date, exactly. Yeah.
This is another question about zakah on rental income. Do you pay zakah on gross or net rental income? I think, again, you addressed this question a little bit before, but basically the zakah is then paid on the amount of income that eventually becomes an asset because you've held it for a year, right? So the net amount.
Yeah.
Okay.
Yeah. All these expenses, if they are due before the hawl, let's say you have an income but you have expenses due before the hawl, you can deduct those because they are a current debt. Again, we do not look at the income per se because that income becomes part of your assets. If any amount left for the whole hawl period.
Okay. And again, this is going back to another question about rental property. What if you buy a rental property and you get a mortgage through Islamic finance option like guidance? Do you pay zakah on the total value of the property or only the amount you've paid so far? You rent the property. The mortgage. So I think
if it's a rental property, the property itself is not zakatable. So you cannot deduct in this case any mortgage payment beyond the hawl date.
Okay.
Yeah.
And this is a question asking about what are alternative halal savings account plans that Azzad offers? Is there a max amount of annual contribution to these options? Also, can I roll my current 529 funds into these halal options?
I'm sorry, rolling your 401k?
No, 529. So what alternatives are there for
Yeah.
halal college savings plans?
Yeah, you can do. Unfortunately, there are not much choices like the 529. There is the cover deal, which is educational savings account. You're allowed to do $2,000 per child per year. The money that you contribute is after tax money, and the money will grow tax free if it's used to pay educational expenses, tuition, boarding, books, etc. So that's the option that we offer to clients. Now, to convert from 529, yes, but you have to withdraw that money, and you will be probably liable for any penalties or taxes on the gain in this case. And then you can really invest that money in covered debt. The other thing is using a Unified Gift Minor Act account. There are not much tax benefits like the cover deal and the 529, but at least you can invest, you can control the investment, and you can choose to invest it in a halal way. And then the taxes, of course, it is liable for taxes like regular investment account, but it provides good asset protection, for your children, and you can use it for education and other than education. You can use it for anything for your children expenses.
There's a question. I have a 401k and I created a brokerage window inside it and transferred the money from my 401k and then invested in halal funds. Since Zakah is not due on a 401k plan, I believe this also holds for brokerage accounts, or it sounds like self-directed accounts. Is that correct?
Yeah, again, if it's a 401k and you're not allowed to withdraw the money, there is no zakah on this account, even if it's a brokerage link account, because it's under the umbrella of the 401k. The legal owner of these assets is your 401k company, or your company, actually.
And that also brings up a good point that if your plan does offer self-directed options where you can create a separate brokerage account, that's a good way for you to invest your 401k in a halal way. So you can use halal mutual funds then usually that are available on most platforms. So definitely a good idea to talk to your employer and see if they do offer that option. Now, this is a question again about deducting a financing. Somebody has financed their home with a halal financing institution. Can they deduct the principal and profit as a liability?
The principal from, again, this on their own residence. This is not zakatable. The home of your residence is not zakatable because it's not a tijara, neither it is cash or equivalent. So the mortgage that you have, again, that's not deductible. If it's any payment beyond any mortgage payment beyond the haul date, that's not deductible. So it's only the amount that is deductible is the one before the haul date.
And this is another question, I think, kind of relating to the question about cash. My Zakah deadline is at the end of Ramadan. After last Ramadan, I got paid for my business around $200,000. It's not been a year yet. Should I pay Zakah on it?
Wait. I mean, that's a big amount of money. You can wait until the 12 lunar months, until passes of the passage of the haul, and then maybe you spend that from that money any expenses, etc. So that may become less, and then you can pay the zakah, on the amount that lasted the full haul. You don't have to pay it right away.
Okay, but they can choose to if that's
Yeah,
simpler?
if they want to choose to, yeah, if they want to choose, like if they follow them, if they have a discipline just to look at the howl date and see what amount of cash, yeah, they can choose to do this. I mean, in this case, they will be paying extra for zakat, which is fine. No problem if you want to really volunteer and pay more. No problem. Inshallah, you will get the reward for it, but not not to pay less. That's the concern. That just to make sure that you're not underpaying your zakah.
Okay. And are there any halal stocks that don't have to be purified?
Um, Possible, but it's really difficult. The fact that we're living in real world. I mean, purification. It's an issue debated by the scholars, since for the long time. The question if the mixture of halal and haram and how you deal with it. So there could be some, but I'm not aware, if there is any specific security that doesn't require, purification. Maybe some companies owned by, companies run by Muslims aware of the Islamic guidelines and they run their organization, maybe some Islamic banks, shares of Islamic banks, or companies run by people that they have in their discipline, in their investment, or in how they run the operation, they follow the Islamic guidelines. You're right. Yeah, that's possible. You can maybe find some companies that they don't require purification.
Yeah, so usually I guess in our experiences, companies may have like even an insignificant amount of revenue, or the other issue may be that it may not be reported. So in that case, we may have to assume an amount up to the reporting threshold may have come from an impure source.
Yeah.
We don't know. So that's another area that sometimes needs to be purified. A question about calculating purification on stocks, but also on dividends. So whenever we look at purification, is it again based on the asset, the stock value, or is it in any way related to the dividend payout?
Purification is part of the revenue. So, like, the interest income, for example, that the company earned, or any insignificant amount of revenue that we deem to be coming from prohibited areas, those are the zakatable. I'm sorry, those are the amount that we use to purify.
Okay, so we're purifying the share.
Based on revenue, yeah, based on revenue, exactly. So not some companies may not even give dividends, uh, so still you're required to purify, or maybe the share of the company uh, went down. You have has nothing to do with the movement of the price of the company, or the company giving dividends. There is an opinion, of course, that one methodology that they pay 50% of the dividends. Some methodology used in the past by some uh, financial companies or investment companies. But the one that we use at Azzad, we pay it from the income.
And this is a question about stocks which you may be holding that are not halal stocks, and you're planning to sell them. Like, for example, somebody who's holding some stocks that don't pass Islamic guidelines, they're planning to sell them, but in the meantime, do they pay zakah on them?
No, these stocks that they fail the Islamic guidelines and they're not halal, there is no zakah on those shares.
And once they do buy halal funds, do they wait 1 year
Yeah.
until they pay zakah?
Yeah, you're right. You wait 1 year and then you pay the zakah after the 1 lunar year.
Okay. This is a good question. I do not have savings that would cover the zakah on my IRA accounts. Can I make a withdrawal by paying the 10% penalty and taxes, or can I keep track of what is owed in zakah and then pay it in a later year?
Yeah, zakah is due right away once the zakah is due, then you have to pay the zakah on that money, even if it costs you penalties, and because it's already taken into consideration. If there is any penalties or taxes, it's already taken into consideration when assessed.
Okay. Educational savings accounts are for kids, and they're the beneficiaries. Do I have to pay zakah on the educational savings account money, or do I pay only for kids who have reached puberty?
Yeah, zakah, the custodian should really be responsible for paying the zakah or helping the child to pay the zakah. So zakah is due even on the minor, and it is the responsibility of the custodian to assist the child in paying the zakah of that money.
And this is a question actually, is an RRSP, which is a Canadian retirement account, is money in a Canadian retirement account zakatable?
Again, if you're enabled or given the choice to liquidate, I'm not sure exactly in the Canadian rules, but if they are like the U.S., if it's like an IRA, similar to IRA, where you're enabled to withdraw the money, then again, that would be zakatable after netting the any taxes or penalties.
Okay. And this is a question, why don't we pay zakah on non-halal assets or stocks?
Because the zakah is, those assets, they're not considered what we call mal mutaqawwim shar'an. Like the ownership is not, you're not supposed to be owning these non-halal assets. So in this case, the scholars, they look at it also as they use a rule called zakatu tamlik. So the non-halal assets will not be considered as a lawful assets to be owned. So that's why they're not zakatable.
Can
Supposed to
zakah,
own those particular assets.
okay. Can zakah or purification be paid towards a masjid, towards building a masjid?
Now, in general, no. The zakah, in general, zakah masjid is not one of the 8 recipients of the zakah or the building of the masjid. However, in non-Muslim countries, masjid or Islamic schools may become eligible for zakah under the broader sense of fi sabilillah. In other words, as the broader sense fi sabilillah, there are views of scholars that they looked into this matter, and they said that zakah in non-Muslim countries where Muslims are minority, the money can go to building these masajid and to advance the word of Allah Azza wa Jalla.
A question, I owe about 70% of my house that I live in. I own, I think, around 70% of my house that I live in. I have the money to pay it off, but I want to invest somewhere else. Can I deduct the full house price from my total cash? So can I reduce, it sounds like the question may be asking, can they reduce that 30% from the total cash that they have on hand when paying their zakah? Maybe?
Okay. No. So in this case, that's it. Like, again, that's, they can pay it, but, they're not paying it. And, it's not, and again, it's not due. It's not like demanded to pay it. So only the amount that that person can deduct only any payment due before the howl. But the other money, again, the other money that you have depends on depends on what type of assets that money is. And again, we look at the, whether they are, how they are invested, based on the category of type of assets, then that will be zakatable.
Okay. And you mentioned purification. Do you have a suggested percentage that we can deduct instead of calculating, which would be tough for a layperson like me? So what practical advice would you give somebody who is looking to purify their account but may not have the tools and resources to do so?
Yeah, I think what you want to do, I think most halal funds, they provide the purification. If they don't, then you probably need to call your mutual fund or your financial advisor and ask the advisor to calculate it for you, to calculate the purification amount. So you just need to demand it from the financial company if they are presenting you with a halal investment opportunity. IOFI makes it the responsibility of the financial intermediary to calculate the purification amount for the investments or for the investors or the customers. Now, if you don't, it's really very difficult. I don't know how to make an assessment on this.
And for, of course, our clients that are in our ethical wrap program, our wealth management program, we calculate the zakah and purification. For anybody who's investing in the Azzad funds, you can go to our website, azzadfunds.com, and look under investments and mutual funds, and you'll find the purification calculator where you can actually enter the number of shares that you've owned and the dates that you've owned them, and it will provide for you the purification amount. But again, as Bashar said, it's very difficult, unfortunately, and again, without knowing your portfolio and what stocks it's been invested in throughout the whole year, again, it's very difficult to do. We are going to take a few more questions because we're running up to almost an hour and a half. But let's say if your Hal ends in January, but you want to pay your zakah in Ramadan, can you pay zakah a few months from your Hal? Can you prepay your zakah?
Yeah, there is no problem. You can prepay zakah. It was reported that the Prophet Muhammad, peace be upon him, accepted the zakah of his uncle Al-Abbas a year and 2 years in advance. No problem with that. You can prepay the zakah. So you don't have to wait until the Hawl or until Ramadan. But two things you have to do. First of all, you have to track it. And second, you have to make the niyyah, the intention. When you pay that money, you want to intend this for zakah. So two things. As long as you meet these two requirements, no problem. You can prepay the zakah in advance and then make settlement at the date of the Hawl.
Okay, and I think one more question again about zakah on assets that belong to minors. Is zakah due on gift accounts for minors where parents are custodians?
Yes, this money is zakatable. Yeah.
All right. I think we've come close to the end of our session today. We thank everybody for joining us for this part of our presentation. We tried to get through all the questions. However, if there are any questions that we did not get to, please feel free to reach out to us. Again, thank you for attending this year's zakah presentation. We wish you all a blessed Ramadan. Thank you and have a good afternoon. Assalamu alaikum.
Assalamu alaikum.